Oh, nice.
It's
Okay.
definitely warm water. So,
Yeah, you're breaking up. You're breaking up.
Okay.
Yeah.
So I'm going to touch my listener. If you need anything, just let me know.
Okay, very good.
Sorry.
Yeah, goodbye.
Okay.
Bye. What?
Who's that guy that Trump was talking about lately that he likes? Head of Hungary?
Oh, yeah. Yeah. Yeah.
But that, he seems like a Democrat.
No, he's a dictator.
Oh, is it the president?
Yes. Yeah. He's like Vladimir Putin. All right, welcome. We're going to start in 2 or 3 minutes. You have time to get some water, pen and paper. All right, we'll start in a couple of minutes, giving a chance for people to join. All right. Well, welcome back. This is kind of like the third one in the series that I started with a fishbowl. And my name is Eric Martel. I'm a real estate investor, an entrepreneur. I've done over 650 single family flips over the last 10 years. 5 apartment buildings, $85 million in real estate transaction on the single family side. I've been helping people invest in real estate by with my company Martel Turnkey, but also with Flip System, where we're helping people that want to invest in real estate using our model. And so over the years, I've shared my knowledge and experience on financial education, entrepreneurship, and how to generate passive income, achieve financial freedom. You can find me on YouTube, on social media under Eric Martel Official. I'm also doing these. If you're looking for the slides, I'm also on YouTube Live as well, for where I'm recording this call and sharing some slides as well. But I'm everywhere else. Instagram, on as you can see here, on Fishbowl as well. Feel free to DM me on Fishbowl as well. And just to kind of recap on what I talked about last time, I want to make sure that we all kind of like can try to solve the same problem here. But what every American is worried about is really kind of like consumer debt. This is a big worry right now. But also we talk a lot about economy, job security, retirement, and inflation. When we talked about job security, we were talking about like the full-time employment, how it's under assault. I'm not going to go over these topics again, but you can look on my YouTube channel. I talk a lot about how full-time employment is under assault with the gig economy, and even the working from home trend that started with COVID. Well, accelerated with COVID. It started before COVID, but it was really accelerated with COVID. Then we talk about retirement, how corporate pensions are gone, or some of these corporate pension plans are becoming more and more insolvent. They're because of the great financial crisis of 2008. Then they're trying to make up time by making riskier investment in private equity. Lots of articles written about that, and how that actually made it worse for these pension plans, these corporate pension plans. So a lot of them are becoming insolvent. That means that if you have a corporate pension plan, you want to make sure that the company is solid, that they're going to be able to pay the deficiency in the pension plans, to make sure that you're going to have a pension when it's time for you to retire. If you don't have a pension plan, or maybe you have a 401k, we talk about 401k that is failing to keep its promises. I talk about like 5 promises that 401k: tax advantages, secure, comfortable retirement, lower taxes at retirement, flexibility in terms of investment, and having great returns. And I talked about all these things are basically not being met. All these 5 promises are not being met by the 401k. And it's just like, if it's not meeting what your requirements are, then I keep looking for solutions, and I do have a solution for that. And this is what we're going to talk about today, about where you're going to put your money so that you can solve all these problems. You can solve your job security problem, your retirement problem, and your inflation problem. We talk about inflation also, how it's eating away at your purchasing power, and that's and then we talk about how that investment, real estate investment or other investment, can help you maintain or improve your purchasing power. So that's kind of a recap of what I've talked about over the last couple of fish bowls. So when we look at, kind of imagine, so we talked about financial freedom or having passive income, and basically living life on your own terms. That means no more 9 to 5 unless you want to work 9 to 5, but having the flexibility to do what you want to do when you want to do. And then money has your ally, not something that you worry about. Having passive income coming into your bank account every month, and that your bills are taken care of, any emergency expenses are taken care of, and you don't have to worry. Also chasing your dreams, not your paycheck, not having to focus on your next gig, your next job, making sure that you don't have a gap, not even worrying about having a reserve. A lot of people have a reserve in case they lose their job or in case they have a gap in income, but really chasing your dream instead of paychecks. So this is the key here in achieving your lifestyle. So if I showed you how to solve all these problems, how to achieve this kind of lifestyle, the question is, would you do it? And believe it or not, I talk to a lot of people, and a lot of people, they don't want to do it. When I show them the solution, and the solution is really about generating passive income. It's pretty obvious to me, probably obvious to a lot of people here on this call. But how do you generate passive income? Obviously, there's tons of ways to generate passive income, and none of them are going to be your job. So it's always going to be something else. And so the only way to do this is by having a business, investing, or if you're lucky enough, smart enough, or talented enough, is intellectual property. Maybe you wrote a song, maybe you wrote, you did something, and then, that really, that's something that you can sell and you can license, then this is fantastic. So what I've tried over the years is pretty much a lot of things, a lot of businesses. There are maybe a few types of businesses I haven't tried, but a lot of them were in real estate, like wholesaling, Airbnb, but also some that were not real estate related. So Amazon FBA, for example, stock market that tried all kinds of different strategies on stock market, a low-carb grocery store, gourmet sauce company, catering, private chef business, consulting businesses, software, all kind of trucking company is also another big one that I tried. Big one meaning it cost me a lot of money. And then, so all kinds of things like that, even an import-export and jewelry business. So I've tried a lot of these things. And then when you look at that, you say, well, how do I pick which one I want to do? Which one is going to generate passive income? So you kind of have to think about it and say, well, I have a limited amount of capital. So the initial capital investment that's needed is something that I have to consider. That's very important. It's very important for everybody else. And then that's going to eliminate a lot of businesses. For example, when I started my trucking company, or even the grocery store, it required a lot of money, capital upfront. The trucking company, I'd buy like 5 trailers and five tractors, and then I think it was like 8 trailers that we started with. That's a significant amount of investment that you have to do to buy that kind of equipment and hire and all that kind of stuff. Real estate really requires some capital, but not as much, depending on because you're using leverage in most cases. When you invest in stock, you invest in whatever money you have. So if you have $1,000, that's your initial capital investment. Are you going to be able to generate enough passive income with $1,000? Probably not on the stock market. Then you have the initial time commitment. So to get these things off the ground, especially if you're working full time, you can't pick things that are going to require like a huge amount of time to get started. Trucking company, there's so much red tape, so many requirements, so many things that you have to set up, even to buy the truck, move the truck to your location. It costs a lot of money, and it costs a lot of time to get that set up. All the permitting, the licensing, etc. Grocery store business that I've done, it requires some time as well in order to build the relationship with with the people that are going to provide, that are going to stack your shelf. The gourmet sauce company that I owned was also a lot of requirement about finding out the co-packers, the licensing, networking with the grocery stores, the whole marketing and stuff like that was needed. We needed for that. When you talk about stocks, real estate, depending on the strategy that you're using, or Amazon FBA, you can get to it. The initial time commitment is not as much, and you can get to revenue a lot faster. Then you have scalability. So grow revenue at any level. So real estate is highly scalable, especially with leverage. While businesses like the gourmet sauce company and the grocery store, you have some limitation in terms of your co-packer. You have limitations in terms of location, where you're going to store, where you're going to sell your sauce, or where you're going to locate your grocery store, and then market demand. And then when you want to scale these kinds of businesses, you have to put more money to scale that business. Trucking company, again, require a lot more capital. I want to have one more tractor. I have to spend, $150,000 to get that additional tractor and some trailers and stuff. So lots of money just to scale for one more truck. Then you have the risk and returns. You look at stock market investments. It's fairly volatile, but you can get like 7 to 10% returns. Some people, they may have some additional ways of doing it that it requires more time, and then you might be able to get a little bit more returns. But then you have to have more strategy, more different strategies, different ways of looking at the investment. When you look at real estate, the returns tends to be, the cash on cash return tends to be between 8 to 10% for the single family rentals, which is something that I do. And then you have about 3 to 5% appreciation, and that has lower volatility. So I can really count on that. And the 3 to 5% is really on the overall property. So that really adds up. So that means that I could be making about 15 to 30% return when I include the appreciation, the cash on cash return from the cash flow, and the principal pay down on the mortgage that the tenant is paying. I could be looking at 15 to 30% in returns that are making, and it's not really that volatile. And that's all due to also with leverage too. Then operational challenges. So operating a trucking company is a nightmare. And so it requires permitting. State taxation is a nightmare. You have to keep track of your mileage that your truck is doing in every state, and then you have to divide the value of that transaction based on the mileage that is passed on by that state, and you have to pay taxes on that. You have to have all kinds of tracking, all kinds of reporting, inspections, etc. It's just a nightmare. Some people call it barrier to entry, but it's really, the challenges operationally are immense. You have to have lots of systems in place and lots of tracking in place to do it successfully. And I did that. We had partners that did that, and it was still a challenge. Real estate, you don't have to really worry about these operational challenges. You can also easily build a team with property managers, like contractors and realtors in the markets that you are investing. So, that's a lot easier. I can easily build a team around me to do real estate investing. And then finally, complexity. So is the business easy to understand? So if you look at real estate, it's probably one of the simplest business to understand, especially if you're starting with single family. So, that, I'm buying a house. I know what a house looks like. I'm going to fix it up. I'm going to rent it to someone that wants to live in it. So it's very simple. Even the lending is pretty simple. You can make it complex if you want. You can go to different light industrials or all kinds of different industrial businesses, industrial real estate, and then you can complicate the heck out of it. But you can also keep it relatively simple. And I like simple. So, but even if you look at all these criteria, it's not going to tell you which one is going to be the best for you. Obviously, you want something simple. You want something that's going to be minimum risk. That's going to be less cash and all that kind of stuff. But none of those are really meeting 100% of the criteria. Some of them are close, but all of that. But how do you define, what framework do you use to identify which of these strategies is the best? And for me, it was the alignment. And in the book that I wrote called Stop Trading Your Time for Money, which is actually the title for this fishbowl, in my book, I talk about that. I talk about the strategy alignment triangle, where we're aiming at a goal, where the goal is to generate passive income. And then I'm looking at the triangle basically has 3 different corners. One of them is the strategy. The other one is resources at the bottom right-hand corner. Then I have bottom left-hand corner, I have the market. And really, the idea is that the 3 corners of the triangle have to be strong enough. They have to support one another in order for the strategy to achieve its goal. You have to pick the right strategy, but you have to have the right resources. Just to give you an example, if I want to do medical office, for example, or a nursing home or something like that, my goal is to generate passive income. That's fine. The strategy, medical office, etc. Then I have to look: is this scalable for me? Is this the right risk return for that? How complex is it? How complex is it for me to do medical office or nursing home? Right? You can see that if I want to do a nursing home, I don't have a nursing home business. I have to find the right facility, the right home to operate that. But if I look at the bottom right-hand corner, what does it have to support me? What resources do I have to support that kind of business? I'm going to have some time commitment to get that set up because I don't know it. How much capital is required? Then the capabilities. So what do I know in terms of of that business? I would probably have to partner up with someone that wants to do the nursing home and then get their requirements to make that happen. And it's not as easy as it sounds. Then you have the whole operations. I don't want to have to deal with the operations of that. I don't have that knowledge. So again, I have to partner up with someone to manage the operation. So when I look at this, I said, well, the resources I have, maybe the time, some of the time, maybe some of the capital, but I would have to really partner up with someone that knows more about that business to identify the right market, the right property, all of that. Then, that's kind of brings us to the market. So which market do I go in? Like, what's the best market for that? What's the best market for that? I'm in Fort Lauderdale, Florida. You'd think that'd be a great place to do nursing home business. But, there's all kinds of, which is the neighborhood, the area that is best to have a single family, like a nursing home that has 6-8 rooms. Which one is profitable? What are the laws, rules, regulations associated with that? How do I set up this? What kind of renovations do I need to do? All that kind of stuff. So it's pretty complex to get that done. It's very easy to look at it at the surface and then say, well, this is great because, all these older people, independent aged individual, they want to go that, and they're willing to pay $3,000-$4,000 a month for a room in a house that has certain services and all that kind of stuff. And it's easy to look at it and say, wow, this is a gold mine. But the gold mine is that there's a lot of challenges associated with that in terms of operating that business. Do you want to do that business? Do you want to partner up with somebody else? How are you going to partner up? So again, some challenges associated with that. Then you look at, obviously you can look at multifamily, the same thing. But if I look at single family rental, which is the one that I prefer, the model that I prefer, in order to generate passive income, I would look at strategies, single family rentals. So this is something that's fairly scalable. So I can buy one house, I can buy 2 houses, 3 houses. When I compare that to a multifamily kind of opportunity, then I don't really get to choose. I have some kind of budget, and I can say, well, I have like $1 million that I want to spend on this. But so often what happens is that you're going to find something that's going to be way below. There's going to be a 6 unit, and then just like, do I buy that, or do I wait to find a bigger unit where I can use my whole $1 million or whatever? So you have some of these challenges where it's hard to find the right size multifamily sometime to meet the capital that you have to invest in that property. Single family rental, I can go in turnkey rental properties like Martel Turnkey, and I can buy 5 if I have money for 5. I can buy 20 if I want 20. I can really adjust and scale to whatever way I want in order to do this. And when we talk about flip system, again, this is something that you can go and do and scale up and do 1, 2, 3, or 4 properties and get that going. Risk return wise, also we're looking at that complexity in terms of single family rentals. It's fairly simple to get that done because we all understand what the business is like. When we look at the supporting resources that I need, Well, it's pretty easy. So I probably don't have to spend too much time. The capital, there's some capital needed. As long as I have a good credit score, I can go and get a loan, and it's a either a traditional loan or a DSCR loan, which is based on the asset and the cash flow from the business, and then I can get a loan for that particular business. In terms of what I need to know how to find deals, how to analyze the deals, maybe build a team with a property manager, a realtor, to really manage the operations out there, to find the deals for me, and then contractors. They can probably connect me with the contractor. It's also possible to find some coaching program like Flip System that would be able to help you really scale up, find the right market, and all that kind of stuff, which is kind of like the bottom section of the triangle. So I have the resources pretty solid. I think a lot of people have that in play. Then the market is which market is actually going to give me the right risk returns. So risk is fairly low, but the returns, I want to make sure that this property cash flows. I want to make sure that this property appreciates, and then I want to make sure that it's going to have to be balanced with the acquisition costs. We found that you can't really buy a property above $250,000 that's going to cash flow. So this is why one of the markets that we pretty much eliminate is the West Coast and the East Coast. It's very hard to find. It's impossible to find a cash flowing property, single family rentals that's going to cash flow on the West Coast, unless you put a lot of money down, but then your return is going to be very, very low. Then you have to deal with laws, rules, and regulations. So typically, we tend to go to the states that are landlord friendly. Not that we want to be bad landlords and take advantage of tenants, but we just want to be in a state where if a tenant doesn't pay the rent, well, I want to be able to evict that tenant in a relatively quick fashion. I think that's only fair. I'm operating a business. I don't want to be, and I'm relying on that income. So I want to make sure that money comes in. So these three things, the strategy, single family rentals, the resources that I want to put in play, and the market, again, they have to support one another to be aligned with generating passive income. So this is kind of like the key here that was, for me, that was missing when I'm looking at all the criteria of all the different ways that I can generate passive income. This was the one that made the most sense. And that's, again, very scalable. So why cash flowing real estate? We talked a little bit about that, I think, last time, but really money is an illusion. When you look at the cash, when you look at your currency, it is an illusion. You can put, but when you look at real estate is real, right? So when you look at, so my example was always like, if I have $25,000 today and I go and buy cups of coffees and the cup of coffee costs $5, I could buy 5,000 cups of coffees. And the thing is that money, that inflation is really eating away at your purchasing power. And this is what the focus is like. And this is why I'm saying that money is really an illusion. So if I put that $25,000, instead of buying the coffee, 5,000 cups of coffee, I put it in my sock drawer and I let it sit there for like, 5 years. How is that going to affect my purchasing power? When at 5 years down the road, I look at my sock drawer, the money looks exactly the same. It's the same currency, it's the same bills, and then they're all spread out in my sock drawer. And now I say, okay, well, today, let's say the inflation was 3% every year. Today, I'm going to go and buy some cups of coffee. And I take my $25,000, and now the cup of coffee is $5.80. You think this is not a big difference. The price is not very different, and you haven't felt the difference, the change in price year after year. But after 5 years, now you take that money and you say, I want to buy cups of coffee. I can buy 4,300 cups of coffee. So I've lost purchasing power, right? And that's because that's why I say that money is an illusion, because it looks the same, but really it's very different. What I can buy from it after inflation has eroded it is very different. And real estate, when you look at real estate, it's if I was to take that same $25,000 and buy a single family rental for $100,000 and get a loan, so put like 20% down, get a loan for $80,000. And then the rent would be $1,000. I would pay like the mortgage, all that kind of stuff. It would cash flow about $240 a month. And over the 5-year period, my house would appreciate at over that period. For I think I had like appreciation, like to say like 3% appreciation, which is very modest. The rent would increase about 3 to 4%. Then you have the same inflation. I have a 7% interest rate. But after 5 years, the house would have been $115,000. So it had have gained value, $15,000 in value. The loan balance would be a little bit less, like it would pay like $79,000. And then the accumulated cash flow would be $20,000 over that 5-year period. So that means that the total value that I would get at that point, I started with $25,000. And after 5 years, I would have $56,000 in value, equity in the house, as well as accumulated net cash flow and all of that. So I basically gained purchasing power of basically almost $5,000. I almost doubled the number of cups of coffees that I can buy over that period. So when you look at this, when you look at the appreciation that was appreciated tax-free, right, $15,000, the net cash flow is also kind of tax-free because I can do like a depreciation, and the depreciation over just a straight line depreciation would actually offset the net cash flow that I got. So I would get that for $20,000. Then you have the loan pay down. So that means the tenant is paying the mortgage basically. So that's only like $1,000 there, not that much, but that's also tax-free. So the total return is $36,000. And that's an annualized return of 17%, right? So that beats the stock market if you just put it in an ETF, and it's a lot. All of that is tax-free. When we talk about one of the promises of the 401k about the tax advantages of the 401k, and Wall Street wants you to believe that this is the only place where you can have tax-free, all of this here is tax-free. The appreciation is tax-free, the cash flow is tax-free, and the loan pay down is also tax-free. And you get 17% annualized return over that 5 years. So this is why real estate is so powerful. You get advantage of the leverage, something you don't really have on you don't have long-term leverage on the on stock markets, for example. But here for real estate, you can have leverage over a 30-year period. This is amazing. Positive cash flow, then we have appreciation, and then we have tax advantages. And there's really nothing like this out there. There are some investments that are similar, that are close, that are good. I mean, you can do dividends and stuff like that, and you can still improve your purchasing power, but not to the extent that you can do with real estate. And so there are all kinds of cash flowing real estate out there. So we talked about multifamily already, but the thing is that you have to pick which one. So you can do retail, you can do office lease, you can do storage facilities, senior homes. You can do mobile home parks. You can do all kinds of these real estate investment that are going to generate passive income. Private money lending is another one too that's pretty popular. And when you look at all this, like how do you pick, right? So now we've eliminated a whole bunch of things. We know we don't want to do a trucking business. We know we probably don't want to do a gourmet sauce company. But now we have to pick in real estate that generate passive income. And so I basically, in my book, Stop Trading Your Time for Money, I also have a quadrant in there that shows kind of like all these investments based on the risk associated with it and what is the time that is needed in order to get to a revenue, to get the positive, what is the time it takes to ramp up. And so the bottom left-hand corner, so this is the one that have the lowest time to ramp up and the lowest risk. I have the single family rental, private money lending, you can do house hacking, and then you have the single family, kind of like the BRRRR strategy, where you basically buy, renovate, rent, and refinance that property when the tenant is out after the seasoning period. All right, so So these are kind of the strategies that are the easiest to get into, the lowest investment in time to get started, also the lowest investment, so lowest risk, and the easiest to scale up. So that's why I recommend these strategies to people that want to get started in real estate, and because it's low complexity and low risk. But people, you didn't hear me say anything about short-term rentals, did you? And that's because short-term rentals is, it sounds like a great business at the beginning. When you look at it from the outside, you say, well, instead of renting my place for, for $3,000 or $1,000 a month or $2,000 a month, I can rent it on Airbnb for $4,000 a month and stuff like that. And it is true that sometimes you will be able to rent it for twice or three times the amount of money that you could have if you were doing a long-term rental. But the issue is that you're going to have to buy something different than a long-term rental. So where I invest is normally in these cash flowing properties. I normally invest in what I call the workforce housing. So these are blue collar workers. These are the mechanics, the people that work at the plant, at the GM factory, and all that kind of stuff. And they work. They're decent individual. They work hard. They make good money, and they are honest. They want to pay their bills, and they want to pay their mortgage and their rent, and etc. When you look at short-term rentals, you have to go into a different kind of market. You have to do research. When you research your market, you have to go somewhere where people are going to want to go there, either for, if you look at the midterm rental, nursing, for example, midterm rental, like 6 months rental, you want to be close to a hospital or something like that. So you have to pick your neighborhood, and then these houses are going to cost a little bit more money. If you were looking for short-term rentals where people want to be close to the action, close to the touristy area, then you're going to pay more money. You're going to want to be downtown. You're going to want to be, so these properties, they cost a lot of money. Or you want to be on the beach or something like that. These properties are going to cost a lot of money. Yes, you can ask for more rent, but when you look at that, you have to really find the right balance about that. You're going to have to find a broker to can help you do that. You're going to have to kind of start looking at deals. Hopefully your broker is going to help you kind of identify the right balance, the right neighborhood, the right areas where you can do that. You're going to have to start building out your team, like not only the broker, but also the property management team. Who's going to be doing that? Who's going to be doing your marketing? Are you doing the marketing? Who's going to be doing these turnovers? Who's going to support the people when they are in your unit and they want to have some assistance or they have some issues? So there's a lot of things you have to think about. Then you have to analyze it from a business perspective. So what's the vacancy? What are the rates that I can charge depending on the season? So what are the seasonal rates where I make a lot of money? And what's the vacancy when it's not being occupied? And then you have the marketing. You have to look at regulations. You have to look at all these kinds of things. What kind of filing do you have to do? And is this allowed? Is there any kind of like issues maybe later on you won't be able to rent that property? So you want to make sure that you're in an area that where you're going to be able to do that. So lots of things going on here, and then kind of negotiating the deal and all that kind of stuff, and then raising the capital. There's also some issues about raising capitals for Airbnb. It's a very different way of raising capital, for these kinds of properties. So you should look at that before you kind of get into this. So that's for short-term rentals and midterm rentals. You have some research. It's there are some programs out there that are going to help you figure that out, but it's also cyclical. There's also some issues. If we go into a recession, this could be the Airbnb space or the vacation rental could be going be a little bit slower. There's also some trends about people kind of going back to the more traditional hotel kind of accommodation type of things because they prefer that. They could be closer to the action. It's often cheaper, and they have better quality, and then they have better service. So if something goes wrong, I know that I can call Marriott and tell Marriott to say, I'm not happy with my room. and they're going to say, well, I'm really sorry, here's another room. So very hard to do on the short-term rental space if you have a disgruntled a problem with your units when the tenant is in it or the guest is in it. So something to think about. So there's a lot of people that are kind of like moving back to the hotel instead of the short-term rentals. So that's something to think about. You have kind of like two different kind of short-term rentals. You have the traditional short-term rentals and then the rental arbitrage. The traditional one is when you're buying the property yourself. So you have to kind of analyze it a certain way. The other way to do it is to do what's called the short-term rental arbitrage, where you basically are finding someone that wants to rent the house, the apartment, the condo, and you're renting it from them with the understanding that you're going to do short-term rentals with them. They're not interested in the short-term rental, and you're going to pay the rent to them, and then you're going to get paid more money if from the short-term rental themselves, from Airbnb, for example, and you're going to make the difference. But you're going to support that. You're going to market that. You just don't have to buy the condo. You don't have to buy the house to do that. So that's the advantage. But you have to negotiate these deals and make sure you don't get stuck with the bill at the end. You have to have a good understanding of the vacancy, the rates that you can charge throughout the year, and make sure that this business is going to be profitable. There's a lot of friends that were doing these short-term rentals, and when it went down during COVID, they were stuck. Then they had to pay the rent, continue to pay the rent, and then they were not too happy. Let's just say. All right, so this is the short-term rentals, and then there's like all kinds of legal and regulatory changes. If you're renting a condo, if you're trying to do short-term rentals on condos, there's all kinds of other consideration you have to do on that. A lot of condo corporations do not allow you to do these short-term rentals. So you have to be careful. Multifamily, again, similar, so not similar, but it's a different kind of thing. If you're doing multifamily investing, again, we have to research the markets. These deals are kind of hard to find. So when you find the deal, you kind of have to find a deal first. You can try to look at the markets that you want to be in, but often you have to find the deals first, and then you kind of look at the market and build a team in that market. For example, I have a team in Cleveland and in multiple cities, but in Cleveland especially, because I was looking at multifamilies there, and I can't find multifamilies there. I have a team there. It'd be perfect. If I could find a multifamily deal, I mean, I would totally do it. That makes sense, but because I have a team there. But over the years, I've been in that market for over 10 years. I haven't found a multifamily deal that worked there. We've analyzed maybe 3 deals over 10 years. Hard to find. But I can find many deals in other areas, in Toledo, and in other markets where I don't have a team and I can't find the right property management team to manage those things. So it's very hard. It's very hard to find those deals. It's possible, but you have to spend, when we talk about the initial capital and the initial time investment that's needed to ramp it up, there's a lot of time involved there. And even when you find the deal, then you often have to fly out there. You have to do the due diligence, and it takes a while to do the due diligence, and then lining everything up with the lender and all that kind of stuff. It could take 3 months to get the due diligence in play, get the lender all ready to go, and then being able to close on the deal. So that takes a long time to get that done. And even then, you get some surprises, of course. So that's kind of like the multifamily aspect of it. So what I found is, in terms of the multifamily, I like multifamily. I would like to do more multifamily, because when you value the property for a multifamily, if I'm going to do value add and renovate, I've done 5 apartment buildings, and they're great because I put a lot of money in investing in it, and I more than doubled my money when I sold these properties. And so they're great from that perspective because they're valued. Their value comes from the net cash flow, or the net operating income that they're bringing in, and then the cap rate. So if you can, it just multiplies your income dramatically, the value of the property, I mean, dramatically, when you can increase the net operating income and you can also lower the cap rate. So these are all very, very good factors. But again, hard to find. You know, you have to put like a higher initial investment on those things. You have to also the tenant turnover tends to be a little bit higher. And then also right now, in my opinion, the millennials, they're kind of moving away from these multifamily thing. They're moving away from downtown. They're in the family formation. So they're moving to single family. I have a lot of millennials that are renting single family rentals right now, and they're moving away from the apartment buildings. So it's something else to think about. And then multifamily also is it's kind of hard to scale. So it might be better in the future. I mean, I think that multifamily is maybe kind of like where we may end up, where we may end up doing more multifamily in the future. Right now, I just don't think it's the right time to do that. And it's definitely not where you would want to start. And the problem again is finding deals. They're hard to find. If they're renovated already, they don't cash flow because the cap rate is too low. And if they need renovation, then you're going to need to have a lot of cash. That's great if you can find that, but you're going to need a lot of cash. And you can't really pick your market. First, you would have to find the deal and then pick the market and build the team there, which would require more time. Hard to scale as well. So you're going to find one deal maybe in Kansas City, and then the next one is going to be in Akron. So it's kind of hard to scale that way. Every deal is different. Every market is different. Every team is different. And also, you're going to find that when you find the deals, they may not meet the right size. They may not have the right number of units. You could say, I'm looking for a 12-unit apartment building, but you're going to find like a 16, 20, 10, 8. But, you're not going to find a 12 necessarily. So that's the kind of thing. Capital requirements. So, you're going to have to find the money to invest that. So it's higher initial capital requirement. When I'm looking at single family rentals, it's a little bit different. It's a little bit more straight line. And what I like about the single family rental is that I still have multiple exit strategy. So for single family rentals, I can pick a market first because I pick a market where there's a lot of opportunities, a lot of options, where they have, like I've mentioned, like a landlord-friendly states. And then I have, I pick the right neighborhood, I build a team, they kind of direct me in the right neighborhood, and we can find lots of opportunities that way. We buy, rehab the property, and then we have options. We can rent it out, hold them, we can rent it out, and then sell it as a turnkey flip. We can rehab it and then sell it. We can rehab it as a retail. Also, we may decide that, hey, you know what? A lot of people we have one property right now in Cincinnati where it was renovated as a rental, but now I have someone that wants to move into that property. And so with that level of, and they're planning to do the renovation and build it up to their taste. So, it's a great property and this is what they want to do. So we're going to sell it as a retail. We're selling it as a retail right now. So you have multiple exit strategy. And this is the great thing. It's very straight line. And it's also, when you look at the single family rental model, you basically are picking that market. And then at the beginning, when you're not, if you're doing it on your own, picking the market, you're going to have to figure out which city, which neighborhood, which zip code, and all that kind of stuff. So it's a lot of, and then with landlord-friendly estate, what are criteria? What is the owner occupancy ratio in that neighborhood? All kinds of things that you have to figure out. You're going to have to build a team, So what's realtor? Who's the realtor? Contractor? Is the realtor going to provide me the contractor? Who's the property management company? There's a lot of question around building that team and then trusting them. So at the beginning, you may not want, if you're going to do it on your own, you're going to have to scale slowly, start with one property, and then see how it goes. And that's how I started. in Memphis is basically build a team, look at the market, and then we did one house first. That house was fantastic. We made, we were able to basically get all our money out on the refinance. So I had an asset that was cash flowing, and I had I had $5,000 more than when I started that project. So it was kind of a unicorn, but but that was great. Yeah, and then kind of like, make sure that the team is aligned with your goals and how do you communicate, all that kind of stuff. So there's a lot of stuff that you need to figure out, build your team if you're going to do it on your own. You have to figure out the financing, what kind of lender you're going to use, and all that kind of stuff. There's tons of lenders out there, but every lender's have different criteria. They have different things that they look for and all that. So you're going to have to maybe do hard money lending or something like that to get it going for the renovation, and then refinance into a DSCR loan and all that kind of stuff. So when you're doing the buying, the financing is going to be an important component. And if you're buying it on your own, you're going to have to kind of like trial and error to find the right lenders and all that kind of stuff. Finding the deals also kind of a little bit of a challenge, but you can do it. You're going to spend a lot of time finding deals, analyzing them, organizing the inspection with your team on the ground, having them walk the property, come up with rehab bids and all that kind of stuff with your contractor, all that kind of stuff. So finding the deal, plugging that back in your spreadsheet or your analysis tool to figure out, hey, should I buy the deal or not? What should I buy it at? What should I make the offer at? And then figure out the rehab. So which contractor am I going to pick? Are they going to be like, how good are they going to be in terms of quality, but also how good is the estimate that they gave me? So you want people that, that they're pretty reliable in terms of their estimate, and they're going to work with you if there's any kind of change order. Then finding the tenant, renting it out. You want to make sure that whatever numbers the property manager gave you at the beginning, that it is close to accurate. Otherwise, you're going to end up with the property that was not cash flowing. So again, if you're going to do it on your own, you may start with one property manager and then say, well, this is not the right property manager. I have to find another one. Then if you decide to sell, refinance, or if you're going to, and hold it. So, what decision should you make? How should you, what is the ROI if I'm going to resell it, if I'm going to refinance it, etc. So being able to calculate very quickly all the different exit strategies so that it makes sense. It makes sense for you. And if you're going to sell on your own, if you're going to sell on some other sites, so that's something else that you have to think about. But so there's a lot of things that you have to think about, right? So, but it is, if you're going to do it on your own, you have to be able to answer all these questions. And some of them you can wait a little bit to answer those questions, but you don't want to wait too long. And I know it's going to be overwhelming. If you're going to do it on your own, it's overwhelming. It took us like a while to get these answers, get the right team on the ground, get all of that. And this is one of the reasons why we started Flip System, is to kind of like handle and kind of like answer a lot of these questions for you and provide the resources that you need to get that going and focus on your real estate business. So it would basically be one simple path where all these questions are answered, and then you can do the real estate investing and leave that for you. And we've done over like 650 fix and flips like that. We've done over 250 wholesale deals. We've done some apartment buildings, and we've helped over 1,000 clients do this using that system. And over the last 2 years, our clients have done over 800 of these houses. From the comfort of your home, anywhere in the world, using the same method, strategies, and local teams and employees that we've used to flip these 650 houses. So a lot of people are asking, like, do you need a license for that? You don't need a license to do this. And so you don't have to share the profit. This business would start with you. If you join Flip System, you would be the only one involved in the business, or maybe your partner. And if you follow the program, all the business belongs to you, the investment, the profit, everything belongs, is all 100% your business. So that's what our clients did. And basically, with Joint Flip System, it has basically three big components. One of them is the subject matter expert that basically are answering all these questions that I mentioned about finding the deals, connecting the local team on the ground, all that kind of stuff. And then we have a software that brings all of that together, where you can analyze the deals. We have a property marketplace that shows you deals that have been pre-analyzed and pre-vetted. And then you can analyze them, and then you can connect with your team on the ground through the application and ask them, hey, say, what do you think about that, John or Ryan or whatever? And then they reply back into the application and say, yeah, I think you should put an offer at $5,000 below asking, and this is what I think the rent should be and the repairs. And then you really right up front. It took us a couple of years to get the team, get all of that worked out, and a few more years to get the whole process really squeaky clean, as I say. But now we've packaged all of that in Flip System so that you can get going very, very quickly. A lot of our clients have done their first deal within the first 45 days of joining Flip System. That means that they've done all the training, the online training. They've been introduced to the team on the ground, the coaches. We also have a community where you can ask questions to the community, to the coaches, share your wins, share the properties that you've done, etc. So if this is something that interests you, just DM me. If you also have my book, Stop Trading Your Time for Money, where I also explain how you can do it on your own. You can also follow me on YouTube when I talk about all kinds of ways to do passive income. I talk a lot about real estate investing and how you can do that on your own. The Flip System is basically, you're going to do it on your own with the support of our coaching team, with the support of the community, and also really streamline the process of, with the subject matter expert and the local team, and the software is really going to get you going very, very quickly. So I only have 5 minutes left, but feel free to reach out to me on the DM. Again, Eric Martel Official on all social media. You can find me also on YouTube with Eric Martel Official. And so if you have any questions, raise your hand. I think there's a little hand raising thing out there on Fishbowl. I didn't think it would take that long to get through my material, but yeah. So if you want to raise your hand, if you have any questions. If you don't have a chance to ask a question today, feel free to DM me here on Fishbowl, DM me on all social media, and then we can get the dialogue going and see if this is something that's a good fit for you. All right, and so please raise your hand if you have any questions. It can't be that clear. So I've also recorded this on YouTube so that you can have the slide and show, so if you need visual. I'm a visual person. So yeah, you can look on YouTube. I have recorded this on YouTube as well. Again, you can find it at Eric Martel Official. But yeah, you can always DM me on Fishbowl. Follow me on Fishbowl as well. I'm going to have another talk next month. It hasn't been scheduled yet, but Valentina and I are going to work on that and scheduling it for next month. And I'm going to be kind of diving a little bit deeper, giving you some example of what you can expect with Flip System, or if you were to do it on your own as well. I think it's totally feasible to do it on your own. Don't get me wrong, but I think you would save 2 years of your life if when you join Flip System, it's going to really make it a lot faster for you to get to profit. So, all righty, 2 more minutes. If you want to have any questions, please raise your hand, and then I'll bring you up to ask your question. Well, it's a quiet group. Is it Friday or something, or what's going on? Oh, what did you say, Valentina? I missed your little message here. Wait. All right. I think, okay, it doesn't seem like there's any questions. So, well, thank you very much. Thank you for attending. Really appreciate it. Again, I'm here to answer your questions. Even if you want to do it on your own, you need some guidance. You need to, you want to know more about, Flip System, Martel Turnkey, or trucking business or gourmet sauce company, how to generate passive income in other areas. Again, I'm an entrepreneur. I've done a lot of these businesses, and I can help you with all of those. And if you like to complicate things, and then if you want something simple, I can help you with that as well. Again, thank you very much, and talk to you later. Ready to leave, Valentina? Okay. All right. Thank you very much. Talk later.